Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started.
Well, markets are back at all-time highs. We had the Dow this week up 3.8%. Year-to-date, we now are in positive territory. Look at that. In 1 week, we're positive. That's incredible. Up 3% now year-to-date. S&P 500, well, that got into positive territory last week, but this week we had another 3.4% to add to the gains, and now we're sitting at about 5% up for the year. Nasdaq up 4.2% for the week, positive territory again for Nasdaq. Wonderful at 5% this year. MSCI International Index, another 2% this week. Right now, still the leader in the big index is up 16.2% for the year. The 10-year Treasury, another interesting spot. 4.28% was the close, down for the week 0.1%. Why is that? Well, because when stocks rally, people get more comfortable with risk. Money comes off the bond table. Rates are going to go lower. We keep talking about that. And there you go. It's a little perfect storm. Oil got the big crush this week. Why? Because they bombed Iran. It's that simple. So, and again, this is just the facts, folks. Oil's at $65.14 a barrel. Talk about volatility. If you just traded the news on oil, you'd have had a pretty successful week. Off 11.8% on the price of oil. 1 week. Bonds pretty much flat, 98.8 on the week. Flat, 0.6%. Let's call that a push. So not much going on there. So people started asking me, why are things up? Why is this taking off? Is it going to continue? How high is it going to go? Is this the end? All this kind of stuff, right? I mean, think about it. Think about the news and how you think about things. So right now, there's 3 reasons. 3, not 1. 3. Think about that. What are they? Well, first, believe it or not, I'm going to call it an easing of geopolitical tension. Okay. Yes, we'll give some credit there. So an easing has now transpired. There is a peace deal or peace accord. We'll see what happens with all that, but that's good. Peace is good, of course. Everybody wants peace. We like peace. There it is. Second, because remember, there's 3 things right now. It's not just 1, there's 3. There's a Fed. There's something called the Fed, and they continue to talk about lowering rates in the future as likely. Gradually. You can use whatever adjective you'd like, but the fact is there is something called the Fed. And right now markets think, that's why they're rallying, they think that rates will be going lower. Now I keep saying this, talking about it, and I don't know why it doesn't set in, but it's a fact that this is what they're saying, this is what they're thinking, and it's going to happen at some point, okay? There it is. What does that mean? Well, for all of you thinking about refinancing or borrowing money to do something, maybe you wait a little bit. Wait till it actually happens, and then you can secure those lower rates. If you're not in any big hurry, don't go out and borrow. And what's the third thing, which has been another question that came out of this week, was the outsized rally in mega cap tech once again. That is a third phenomenon of this overall rally. What do I mean by that? Well, that's why there's mixed messages when you look at the market factors that I look at. And one of them is the New York Stock Exchange advanced decline line, we call it. This is traditional measure of market. We call it breadth. Not your breath. No, sure did. The New York Stock Exchange advanced decline line. This comes from a simple calculation. You subtract the number of falling stocks during a given time frame. It could be daily, weekly, whatever you like. From the number of advancing stocks. And that measure can be calculated on any group of stocks. But the New York Stock Exchange advanced decline line provides the most complete look at the total stock market breadth. BREADTH. You got to put the D in there, buddy. Okay. We're straight now. Good. So we're just having fun here today. I mean, come on. This is live radio. It still exists where you can have a conversation, have some fun. Excuse me. So we look at that. And if you look at that, you'll see that it's outsized, meaning that there's only a few of these stocks that are pushing all this stuff up. Okay, to put it in simple terms. And so what that means is if those things start to change and go the other way, which remember a couple of months ago they were, and you were crying because you were down like 20%, that's what this is all about. So just think about that. Okay. And as you think about your future, and momentum right now is on your side, I will give you that. There are always some things we need to look at in the future, like the summer rally and things slowing down and people going on vacations and, you know, enjoying the summer, going to the beach, barbecuing, 4th of July. All these things are coming up. The tax bill, right? It's supposed to happen July 4th. Is it going to happen? Question mark. Big, giant question mark right now. By the way, next week we're going to do our financial freedom show, so don't miss that. But anyway, we'll see. But anyway, these are some things that can change the overall exuberance of this market.
You can hear the Protect Your Assets market briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets market briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.